One stock which was in focus yesterday was clearly Info Edge. That took a beating of almost 10%. That after the street was a tad bit surprised by the impairment that they have taken for one of the investments, because other than that, the numbers were largely in line with expectations. Yes, there has been a bit of a moderation when it comes to the billings as well. We have with us Mr. Chintan Thakkar, the whole-time director and group CFO, joining us to talk to us about the prospect going forward. Chintan, hi, good morning. Thank you so much for making time and speaking with us. First up, let's talk about this entire impairment itself, right, that you have taken for one of your businesses. Could you talk to us about what went wrong here versus your own estimates, and have you written off the full value already, or could there be further write-offs that could be possible in the coming quarters?
So when we started the investment, obviously the opportunities seemed, very lucrative. There was an audacious vision, and we thought that there's a good customer insight on the base of which the founders were starting this new venture. So we backed them, and we backed them across multiple rounds. Overall, we have invested 276 crore, and recently we have also given a loan of about 12 crore. So we have already written off 276 crore, and we are hoping that the entrepreneurs would be able to bounce back and make something out of this. But right now, certainly the situation, particularly from the liquidity standpoint, because of a high cash burn in their business, and money stuck in a lot of money stuck in receivables, working capital, and given the environment for funding, we think that it's a tough situation to be in, and we have always been following very conservative and good corporate governance. So we thought if there is a bad news in the offing, shareholders should know it first. So that's how we have kind of written it off and already announced it.
Do you expect any recovery? Because we appreciate the fact that you've taken a complete write down ahead. So do you expect any recovery? And if the recovery happens, will that be added back to the bottom line?
Yeah, well, it's possible. I'm not saying that it's impossible, but obviously they are in tough situation. So it's a very delicate situation right now. It all depends on next few weeks how they are able to restructure, or if they are able to get new round of funding. Then maybe, I think, as I said, that the idea was great, but it's just the cash burn was too high.
Okay. Given that things in the startup space have been slightly topsy-turvy, will Info Edge be going easy in making any future investments as well? While you've tasted success in Zomato and Policy Bazaar, but post that, frankly, it's looking tough.
Well, I think it depends. We have gone through these cycles of ups and downs. So, and we have been investing it since now more than a decade. So I think we have gone through these cycles. There are always some good opportunities also when the cycles are down. We do have good amount of cash balance with us, so there could be opportunities as well. But having said that, we are on caution, and particularly we have always been on the side of profitable growth. So our advice to all the startup founders is that growth at any cost is not the right strategy. And of course, this era of infinite funds available in the market, I think that era is also gone by. So they have to adjust to the new reality, and so our investment management team also, and make the decisions accordingly.
Chintan, when the going looks great, nobody is looking at businesses which are loss making. But it's only when the tide turns, you tend to look at all the businesses with the magnifying glass. And this is something which we've spoken about in our previous interaction as well. Jeevan Sathi and 99acre, you've not managed to scale them up. And a lot has changed in those businesses as well. So logically, what sense does it make for Info Edge to continue invested in those businesses, because those businesses are loss making?
Yeah. So I'll tell you, I think one needs to have a closer look at what the P&L looks like, right? And if you look at last quarter itself, the revenue growth is, I think, in the range of around close to 40% revenue growth. The billing growth is about 15% in 99acres. I think real estate has gone through a kind of a 7, 8, 10 years kind of a cycle where it was kind of sluggish for a variety of reasons. And when it was always coming up, there was always some bad news, whether it's demonetization or GST or RERA. or the NBFC issues. So I think the real estate cycle has been for a long kind of subdued, but we are seeing last 2, 3, 4 quarters if you see it, I think it's on the up, it's on the rise. And the potential of this business to grow is huge. I think we are just scratching the surface. About 80-90% of our revenue comes only from 8-9 cities, and most of India is yet to be built, right? If you really kind of slice and dice on our P&L, you'll realize that if you look at the investment that happens in the brand, and the promotion, which is little ahead of the revenue. If you take that out, there is an inherent margin even as on this date, right? So if the idea is to get to profitability, we can, But these are internet businesses, these are winner takes all. So you need to keep pushing the pedal when it comes to the growth, right? And if, particularly when you are seeing some green shoots, we would continue to invest a bit more in terms of the advertisement and promotion, and that would kind of have some impact on the P&L. But I think one of the ways to look at is that what is the total investment, the loss that I understand the point, but the loss that right from day one till today, if you really see it, how much loss we would have made, it would be something in the range of, and I'm talking about all the losses in last 12 years plus capex and all that, would be like $50 million. You can't build a good internet property in that type of money, So I think we have been extremely capital efficient. We have been extremely kind of aware of what kind of investment that we make, and we are very cautious in our approach.
Okay, fair enough. I just wanted to understand an outlook on your margins as well, given that they have risen to 39.1%. Your marketing spends as well were optimized. What is going to be a sustainable level that you think your margins could be at?
Yeah, look, I think if you look at last many quarters, we would be in that type of range, right? And particularly the largest business that we have is kind of is the margin seems to be kind of inching up a little bit, So probably that positive trend, is something which we think that we can sustain. Also, the good part of recruitment business is that we have a natural hedge. The large part of our cost component is people cost, right? And if people cost is moving up, it also means that the market is very hot, and that also has a positive impact on the recruitment business. So we seem to be having a kind of a natural hedge when it comes to the recruitment business, and that's like 75%, 80% of our business, right? So we do enjoy that that benefit.
Before we let you go, a quick word a bit about your recruitment business itself, which is Naukri. So are you seeing a bit of a slowdown, and the lag impact of the slowdown in IT hirings is expected to come? Because right now as well, there's a bit of a moderation in your billings.
Yeah, no, I think moderation is probably a right word. We are certainly, when it comes to IT-enabled services, we are seeing a kind of a slowdown. But that's kind of well compensated by the growth in the non-tech sectors, right? And which is, in some way, it's a good, news for our platform, because it just shows that our platform is very neutral and it's just not kind of only for IT. Right? Even within IT, there are certain pockets which are growing very well, right? For example, captive seems to be doing much better than, let's say, the IT services company, right? And what we have also seen historically is that whenever the US goes through certain kind of a recessionary trend, particularly on the tech side, the captive units in India are doing much better, because the more and more companies are looking at India as a destination for captive units. So that may not be in a quarter or 2 quarters, but in the long range, it seems to be a good opportunity for us, all the captives coming. And what I have really understood is that it's just not about the captives in IT, software engineering, but it's also in general, in engineering or in the financial market. I've heard about captives even in the agriculture sector coming out in India, right? So I think hopefully the captives will do much better in the quarters to come.
Sure. And Chintan, just before I let you go, you talked about the impairment that you have taken in one of the businesses. Any other business in the portfolio that you're watching out for, which could result in a bit of a impairment?
Well, we are watching all the investments that we have, and if I have to really include the AIF that we have through which we are making investment, we would have a portfolio of more than 50 companies, right? So we have been watching every investment that we do. As I said, that we'll continue to follow very conservative principles when it comes to if there are any bad news in the offing, we would always follow a conservative view on that. Having said that, we really don't foresee anything immediately.
All right, Chintan. I think somebody is trying to reach you, so really appreciate. Early morning, Chintan,
My
you start
boss,
getting.
I have to take his call.
Early morning, 9:30 you start. 8:30 you start. I thought television guys are the only guys who start early in the morning.
We are in the same boat. Thank you so much.
All right, appreciate your time.